Welcome back. Joining us on the show now is Peter McQuarrie. He's CEO at Exim Australia. Peter, hi. And it's been crazy since the month of October started with what's happening between Iran and Israel and the way the crude oil prices have reacted. Almost 8 to 9% up in this week itself. Now the street is waiting for some kind of a retaliation, perhaps coming in from Israel on Iran. How are you looking at the markets as we get into the weekend? Would you hold long positions? What are you anticipating?
Well, good afternoon, Manisha. I think a couple of things. First off, it surprised everyone in the sense how quickly this has ratcheted up. We're up 8% this week, 5%, big move yesterday. And the overall theme is, how would you be short? So I think you'd have to stack positions at the moment. If you're a trader, that is, you've probably been enjoying the last couple of bucks as far as movement. There could be a few more dollars. We've got New York open in a few hours' time, 6 or 7 hours. And I feel as though that will probably capture a few more, maybe another $1.50, $2 higher for WTI. We'll just see what happens, and then what happens naturally over the weekend if there was to be any retaliatory action from Israel.
Peter, if there is a retaliation from Israel on Iran oil facilities, what kind of a premium would we see on markets then?
Well, Manisha, you've got so many different choke points. First off, how severe was it? Citigroup are saying 1.5 million barrels a day would be stripped out of the market immediately if it was a severe one. If it was just minor, you'd be looking to 300 to 450,000 barrels. So there's the first part. So that impacts naturally supply. Then if you got 35% of the globe's crude traveling through the Persian Gulf, they would naturally have some major issues there. So that's going to impact supply, and then that would cripple demand. So, Manisha, you know, if this was to ratchet up heavily, you could throw $20, $30 on it or more, you know, that because it's a war premium, and it just depends on how severe this is.
Well, absolutely. Peter, just let's take a step back. And when we did see Russia-Ukraine conflict begin, we did see crude prices go all the way to 120. But in the same year, the closing came in around in 80s and 90s. I get your point. These are war premiums. And we could see that kind of an impact coming for the prices. But given the fact you also have the U.S. presidential elections just a month away, how would U.S. look at the crude prices moving like that?
Well, Manisha, it'll naturally impact inflation. There's something that, you know, I don't think the American voters naturally want to see. And what Biden has come out, President Biden said he may go to the defense of Israel. And this is going to be very interesting from a geopolitical standpoint, because you've got Iran's allies are going to be Russia and China, and how that impacts US. So that's not a good sign at all. What impact did it have naturally to energy markets, gold, and of course to equity markets and US dollar leading into an election? So this could be a very, very dynamic, you know, next month as this plays out. This is very unusual, and it's hard to speculate on how far this could ratchet up.
Oh, well, yes. So, Peter, would you say that a long-term view on crude at this point in time cannot be taken? Would you also advise investors not to keep positions open as we head into this weekend? I mean, how should you treat this?
Well, I think you've got to be very mindful, Manisha, because, you know, you could see whipsawing, and, you know, if you're stacking big positions, be very mindful of that, because that's from a, you know, risk management perspective. You've got to know what your risk tolerance is. So there's the first part. And whipsawing won't be unusual. Though markets can gap, and they can gap up $6 or $8 if you get a strike or something happens over the weekend. Then all of a sudden you get that, you know, Monday morning, and it's just, you know, absolute off to the races. So yeah, be very careful from stacking positions. Be prudent. And there's always next week, because you've seen big moves this week. I'm not going to say you won't see again big moves next week.